the dollar could float in a range of 2.25%, compared to just 1% under Bretton Woods. Ultimately, the Smithsonian Agreement proved to be unfeasible as well. Without exchange rates fixed to gold, the free market gold price shot up to $215 per ounce. Moreover, the U.S. trade deficit continued to grow, and from a fundamental standpoint, the U.S. dollar needed to be devalued beyond the 2.25% parameters established by the Smithsonian Agreement. In light of these problems, the foreign exchange markets were forced to close in February 1972. The markets reopened in March 1973, and this time, they were not bound by a Smithsonian agreement. The value of the U.S. dollar was to be determined entirely by the market, as its value was not fixed to any commodity, nor was its exchange rate fluctuation confined to certain parameters. While this did provide the U.S. dollar, and other currencies by default, the agility required to adapt to a new and rapidly evolving international trading environment, it also set the stage for unprecedented inflation. The end of Bretton Woods and the Smithsonian Agreement, as well as conflicts in the Middle East, resulted in substantially higher oil prices and helped to create stagflation, the synthesis of unemployment and inflation, in the U.S. economy. It would not be until later in the decade, when Federal Reserve Chairman Paul Volcker initiated new economic policies and President Reagan introduced a new fiscal agenda, that the U.S. dollar would return to normal valuations. By then, the foreign exchange markets had thoroughly developed and were capable of serving a multitude of purposes. In addition to employing a laissez-faire style of regulation on international trade, they also were beginning to attract speculators seeking to participate in a market with unrivaled liquidity and continued growth. Ultimately, the death of Bretton Woods in 1971 marked beginning of a new economic era, one that liberated international trading while also proliferating speculative opportunities.